Hello and welcome to the Friday market update. Well, help is on the way. We'll get into that in just a minute. But right now, mortgage rates are kind of stuck in neutral, hovering just above 7%. It's kind of like being in rush hour traffic, waiting for the light to turn green. But don't worry, relief is on the horizon. So the personal consumption expenditure, PCE, this is the Fed's favorite measure of inflation, came in as expected. While the headline number actually ticked up from 2.4% to 2.6%, the more important core PCE, which strips out food and energy, held steady at 2.8%. The Fed's goal, as we know, we've talked about it many times, is 2%. So here's the good news. We've officially passed some key months that made inflation look worse than it really is. And one of its biggest drivers, shelter costs, which is basically rents, is finally cooling down. The actual increase in rents right now is way down from where it is being reported in the inflation data. So think of it like a long, brutal summer giving way to the crisp fall weather. Lower inflation equals lower mortgage rates down the road. So why does this matter? So inflation is calculated using the last 12 months of data. So every month, an old number drops off and a new one takes. The December report replaced a super low inflation number from last year, making things look a little bit shaky, kind of like squeezing a big pig through a small snake. Not a pretty sight, but we got through it. So we were happy to do that. Now, we're about to replace some much higher inflation figures from last year come January, February, March of this year. So if month over month data stays steady, we should see inflation and mortgage rates drop. So check this out. The 3-month core inflation rate is trending at 2.1%. In other words, if you took the last 3 months and averaged it, it would be 2.1%. The 6-month core inflation rate is 2.3%. Translation, we are definitely on the right track for inflation to get down to that 2% level that the Fed is looking for. So if this trend continues, rates could actually dip into the mid-6 range by May. That's looking pretty promising. So should buyers wait? Nope. The market is absolutely waking up. I don't know if it's New Year's resolution, a new Trump administration, whatever it is, buyers are getting off the fence and realizing that waiting for a big rate drop isn't a winning strategy. They're getting pre-approved now, shopping now, and preparing to strike. They're taking a little bit more time to make sure they get the right thing, but they want to get in before things happen. Spring buying season is knocking on our door. Purchase applications are already rising. Many buyers are watching homes kind of slip through their fingers on the internet and going, oh God, I like that house. And they don't want to miss out again. So some are moving up their timelines, anticipating an influx of California buyers due to the unfortunate fires. Now, if a buyer is pre-approved, waiting could mean facing more competition and losing their negotiation edge that they have right now. Now is a time to get ahead of the rush of buyers in this busy spring buying season, and if we see those rates drop as well. So why do agents and buyers choose me? Number one, accountability. I keep you updated every step of the way. Number two, accessibility. Always here when you need me. Call me, I'll text back. And three, winning. We win the deals, we win the pre-approvals, and we make sure that the people get into a home so that they can buy the house that they want. So how do you refer me? Group text your buyer and me together. Call me directly, or I'll call them for a free CIA analysis, credit income assets. So let's help your buyers get into a home before the market heats up. Help is on the way. Hope you guys have a great weekend. We'll talk to you soon. Gaylord out.